Welcome back. You're watching Stock Watch with me, Zinati Guma, and joining me to unpack your stock-related questions tonight are Rowan Williams from Nitrogen Fund Managers and Rowan Mutooni from Sanlam Investments. Be sure to send your questions via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X @BusinessDayTV using the hashtag StockWatch. Thank you so much for your time, gents. It's quite difficult to gauge where the markets are at this point because there's quite a lot of mixed trading in the US and Europe, and even the JSE at some point was flat. But ended off the day, I think, more than a quarter of a gain. Rowan, are markets just do they just not know at this point what to hold on to?
Yeah, I mean, particularly the JSE is sort of in a very much a sideways pattern. I think, unfortunately, we've sort of going to be probably stop-start until we get an election date, and then sort of the outcome of the election is clearer. I think the first big milestone is the budget speech. There's quite a lot to unpack there. The fiscal situation is getting very tight. What they do with the forex reserves gains, potentially VAT increases. So it's a nervy environment. Obviously, the global markets are doing better, particularly certain sectors and stocks. Then we've had the US CPI numbers. So clearly, the higher for longer narrative is also holding, and I guess it's going to hold, and it's holding back EM stocks in South Africa, and then China's also an unknown and uncertain. So it's quite a tricky environment. I think we're going to have, just a tough 6 months until we sort of get the elections out of the way.
Yeah, and usually in this environment, good news is bad news and bad news is good news, because after that CPI print that spooked markets on Tuesday, today out of the US, we actually had the retail sales coming out, and there was a contraction that was worse than what markets had anticipated. Could at this time, Roy, those bad news translate into good news in terms of what the Fed could do, or is just the inflation figure just too much of bad news at this point?
Right now, I think what we're seeing is an avalanche of data, and you could change your entire thesis on each one of these bits. We expected this, it underperformed, markets should rally. We expected that, it outperformed. I think you have to keep the bigger picture in check. And what's the bigger picture? Bigger picture is that the US economy is running stronger and hotter than anyone expected. Is it running too strong and too hot? Actually, no. And that's where the conundrum is, because you have strong economic growth, you've got strong consumer confidence, consumer incomes, and inflation is coming down. Now, where the departure is that it's not coming down as fast, and now we're scared that it might bounce up. Now, if it bounces up, then rate cuts are off the table. But then you look at the pace of economic growth, while it's good, it is slowing. So what the market is grappling with is the fact that over the next 6 to 12 months, it's most likely that there's going to be the need to drop interest rates because they're actually constricting economic activity. But you need to start doing that early enough before a recession wraps its hands around, and then you've got other problems. That's what the bigger picture is. And I think what people are trying to do is to use, nobody wants to be the last person in the party, let's put it that way. Everybody wants to see the piece of data that says unequivocally, yes, recession is on, or no, what you have is a soft landing and life goes on. Those are the problems. And then outside of the US, you're seeing the problem that like Europe is in recession, pretty much. The UK is in recession, so is Japan. China is not coming up. So we all know that global growth is a single bet. It's a bet on the US economy. So yes, you'll see all of this information. Markets will rally, give it up, and all of that based on pieces of data. Keep the bigger picture clear, I think, would be the message from me.
Well, the numbers have told us not to bet on the Japanese economy. And that's actually been one of the markets where investors have been bullish on. India, Japan, and moving away from China. And actually today we got data that showed that Japan went into a technical recession and stopped being the world's third largest economy and gave way to Germany taking that spot. Rowan, just coming to you, I mean, should this change the investor bullishness for Japan stocks?
So I guess that does illustrate to you that sometimes stock markets and the sort of growth trajectory of the economy are not always in tandem. So I think what investors are seeing in Japan is more of a value unlock story, company reforms. The economy has been in a low growth environment for a number of years. They've had deflation. So what has changed is they have some inflation. So that's helping sort of pricing power and I think earnings. And then the company management are getting a lot more investor friendly, returning capital, being more capital efficient, restructuring. So that's more the investment case for Japan. You've seen some very big investors like Warren Buffett go in, so that also improves sentiment. So it's more a valuation driven story, I guess, than sort of an economic story. Where maybe other markets are more closely tied to economics. I think Japan less so.
Roy, would you be joining the choir here in terms of the bullishness on the stocks of Japan at this point, or not?
So exactly like Rowan says, there's a difference between the economy and the stock market. The economy clearly is grappling. Over a long time, it has been deflation. They've really struggled to invent inflation. They've had the demographic problems and everything, and they're only just getting there now. So the dynamic is going to be different over the short to medium term. The underpin for companies, however, continues to exist, and the liquidity in the market remains there. And for so long as you're creating inflation, that's positive for stocks. That's a market that's done very well. You mentioned India as well. Those two markets have done very well. It's unlikely that this is an economy that falls over. So there must be a good underpin for to invest into companies there over the shorter to medium term. But remember, everything is driven by what the global economy does. So you have to be careful when you look at these regional bets. But yeah, I totally agree with what Rowan said.
All right. Well, there's a general question here. Can you please advise, how does someone trade through an investment company rather than as an individual? Can you just register a PTY? What share trading portfolio allows for a company to purchase stocks? Too technical for me. Rowan, can you take this one?
So I guess what you do have occasionally, you get a group of enthusiastic individuals creating an investment club, and sometimes they may use a PTY, a private company, in order to pool the assets and sort of manage those assets. So it is permissible. Obviously, there are certain tax consequences in terms of if the shares are held as trading stock. Or for capital gain, and depending on the holding period, you may be taxed at income tax rates as opposed to at a capital gains rate. So you do need to consider that. The dividends would be free of dividends withholding tax as long as they remain in the company. So that is a benefit. And then, as you say, you do have to find a stockbroker that will open the stockbroking account for the company, but that should be fairly straightforward.
All right. Coming to you, Roy, let's take a look at Sibanye-Stillwater. Sibanye has been in close to free fall since March 2022. With the envisaged partnership with Heraeus, precious metals have something to do with Sibanye up 2 days in a row. I'm not sure about that partnership. I haven't really seen those news, but please, can you enlighten us, Roy?
Broadly speaking, if I was to categorize Sibanye among the platinums, because it's got both platinum and gold, it's generally considered the lowest quality stock. Because it's high cost it's high cost and it's got a lot of marginal mines, and its founder has a reputation for engaging in a lot of M&A, gearing up the balance sheet, which has worked quite well in the past. But then during times like this, when that particular industry is struggling, people tend to avoid these companies because there's a lot of uncertainties and unknowns there. So, and one of the things that has happened in the recent past is platinum group metals have sold off significantly. That's been the primary thing. So in a world such as that, you get rid of the lowest quality one if you need to be in that industry. Most investors have basically switched off and moved on. And I think that's primarily been the reason why the stock has sold off. Why has it rallied in the last 2 days? Check platinum prices, check palladium prices. They're both up. I think palladium's up like 3% in 2 days. The first time you've had a bit of an uptick in recent times. And I think again, just like I was saying about the US economy, that sector is so sold off that you have investors concerned that they'll miss that bottom and then it ratchets up and it becomes the next 10 bagger. So I guess when you see palladium prices picking up for whatever reason, people come back in. And when they come back in, they'll go into the lowest quality one because that's the one that's got the biggest leverage upside. I think that would be my explanation.
All right. Well, just looking at that resources complex, South 32 actually came out with numbers out today, and as we were talking about Sibanye, it was leading there, up 6%. But on the other side of the spectrum, South 32 actually had its shares plummeting by about 5%. Rowan, yeah, were the results that bad?
Yeah, I think this is a pattern that we're seeing with the resource companies. Sort of expectations have been sort of moderated as we've seen commodity prices moderate, but they still seem to disappoint. It does seem that there was an EBITDA miss. I think different sort of brokers were looking for different numbers, but overall the market felt there was a miss, and I guess the forward outlook again not as rosy as they have to accommodate to lower commodity prices that they're going to realize and sticky costs. So we've seen as companies report generally some disappointment and a sell-off, and maybe dividends are not what they have been on what the market has been expecting. So I think it is going to be a pattern that we continue to see until, yeah, we get sort of the commodity prices and complex firming. As sort of, yeah, maybe India picks up some of the global growth slack that sort of China has left behind. So the global economy is rebalancing. The US is quite strong. So I think the commodity prices are forming a base, and there was a lot of optimism around green transition metals, but that seems to be a longer term story as well that's going to play out. So sort of general disappointment, and it's reflecting in, I guess, the share prices.
I mean, they did also come out with an announcement on the approval of capital expenditure for a mine in Arizona, I think a zinc mine. And obviously, they've outlined what they expect in terms of addition of volumes there. And I'm wondering, maybe with this dip, Roy, maybe this could be a good opportunity for a company that does have upside in terms of the deals that it's making.
Look, I think you have to be very careful about why you invest in a business. When you invest on a thematic basis, you run a very large risk of getting wrong when that theme fades. So South 32, I think the theme around it is renewables and all of this just transition and all of that, and that's all well and good. But at the end of the day, the management team needs to execute. The resources have to be there, and the costs and all of that have to be generated. We at Sanlam prefer to be bottom up and look at it from a valuation perspective. And if that fits the theme, then yes, by all means be in there. So themes take years to unravel and years to actually come to fruition. But earnings and operation excellence and that sort of thing, you monitor on a quarter-by-quarter basis. I guess that's a long-winded way of saying, rather look at the numbers, rather look at where the macro is, and if you're comfortable with that, then you can work with the management team.
As you're talking about themes taking years to unravel, is Renogen one of them? And I know obviously also one of the reasons why they want to list on the NASDAQ, because they're saying that they think that the helium market is more attractive there. They did come out with an update today saying that helium production is yet to resume after some delays, and LNG deliveries, though, have resumed. Rowan, we did see investors coming back into the stock, surging about 5%. I'm not sure if this is just too little of a gain, considering what it has lost since, for a while, actually.
Yeah, these project-driven investment cases are risky. They speculative, and I guess what the market is come to realize that with these big complex projects, you're trying to mine and capture helium and then liquidate it and sell it and distribute it. It's highly complex, the engineering around that, and there's the potential for mishaps, setbacks, as has been the case. Unfortunately, in a condenser, they found a leak. The supplier sort of struggled to address it. They mentioned that they seem to have found the issue, and the supplier's getting onto it. They're going to try to claim for insurance and against the supplier for the delays, but it's just project risk. And if you multiply the probabilities of a whole lot of things that have to happen in order for the project to be successful, you will actually come to the conclusion that it's risky and there's not that high a probability of success. So I think for the country and for the project, for the market, we'd love it to work. But it is fraught with execution risk. So hopefully they are getting on top of it. And I think if they do, and they do start to produce, we will see the price move up from here. But they need to deliver. And I guess that's what is the market's hoping for and waiting for in the current investment case.
Yeah, and the supplier for what's missing for this helium production is on holiday. Roy, will Renergen investors have to wait a while to be able to go on holiday with Renergen returns, looking at where the company is right now?
Look, all of these project-related companies, exactly like Rowan was saying, you also have to remember the other side of it. They require large amounts of capital. And when that capital is raised, if you're an early investor, either you add more capital or you get diluted, and you get diluted as the probability grows. And sometimes they'll come to you asking for capital even before milestones are reached, because these things eat up money, because they're concepts, because they're things that haven't been done before. So for the ordinary retail investor, and actually for conservative institutional investors, sometimes you say, these big swinging stocks, you'd much rather let the people with the appropriate risk profile carry that. And when the thing starts delivering cash flows and dividends, the boring stuff, then we come in, because then we can analyze it and we can get our 10, 12% growth, and it's part of a diversified portfolio. So there are investors who have the risk profile to support these. And exactly like Rowan says, for the country, it's fantastic. If it works out, well done. And I think we'll see proper change. But for the average investor, I would say sit on the sidelines, watch from there.
All right. Something interesting, I actually missed this. Is 91 a potential takeover story? I saw SENS late this afternoon indicating a new major shareholder. Rowan, do you have any insights on that?
No, I didn't actually see that announcement. I don't know if it could be a large fund manager. Typically, if you go above 5%, you have to report a significant holding. I guess it has been unbundled from Investec, so it may not have a clear sort of shareholder of reference, a larger free float. It is a quality operation with a quality management team and a good track record. There has been talk of some consolidation in the sort of broader asset management industry. We know Quilter has also had some speculation about potential delisting or takeout. So it's possible, but I think management are quite happy with their independence. They obviously just got their independence from Investec, so I think they're happy to remain a independently listed company. So anything could happen, but I'd have to look at that closer to sort of comment further.
Yeah, and I mean, if there is such speculation on these companies being takeover targets or some sort of consolidation, Roy, does it then boost confidence in terms of the attractiveness of these companies, particularly 91?
Look, I guess across the board, one of the reasons why you're seeing a lot of discussion on M&A is that a lot of these companies listed here are undervalued relative to their peers internationally and all of that. With respect to 91, like Rowan said, it's largely manager owned. well, the management has a significant enough stake that they would have a say in what happens. And if they do want to get into a union with somebody else, in all likelihood, it would be to position the business for greater growth, greater reach, or access to markets that they can't do themselves. Remember, 91 operates in a world that is IP driven. So it's actually the individuals. The assets walk out the building at the end of the day and come back tomorrow. So if you go and if you introduce a new investor or significant new influence and these guys aren't happy, they'll leave and not come back. So it's a lot more sensitive to engage in M&A when what you're talking about is intellectual property. So I think there would be a longer lead time. We would hear a lot more, and the rationale would have to be quite sound before they engaged in something like that.
All right. There's a question on small cap capital appreciation. Rowan, is this one that you look at? It's actually addressed to you. Rowan's view on capital appreciation.
Yeah, I do. We do cover it, and we do find it to be quite an interesting opportunity. They sort of have two broad areas: payments and payments technology, and then also software services, where they do a lot of sort of cloud-based consulting. So it originally was sort of what in the US they call a SPAC, special purpose acquisition company. It's one that's actually been successful, where they raised a group of experienced executives raised capital, and they found suitable acquisitions, synthesis software and the payments business. They continue to invest. They do have quite a lot of capital available. I think almost 500 million rand still that they can deploy, and they are in growth areas. I think as they have been investing in growth, so you've seen growth spurts. So they're very good underlying growth, but they're building infrastructure. They're trying to expand overseas. And so the costs go up, and then sort of the profit growth has been a bit muted. So I think the market's been a little bit disappointed just with the sort of trajectory of growth and sort of the quality of it to some extent. So it was doing very well. It has come back to around the 120 level. Given the amount of cash on the balance sheet, it actually looks quite interesting here. And we quite like the DashPay business, the payments business. A lot of it's virtual. They can put payment terminals on Android phones and acquire credit card transactions. So that is quite a scalable business. But they do have to deliver the growth. And I think once they do, the share will re-rate again. So it's going to be volatile. It's not that liquid. So you have to be prepared to accept that. But it is this type of small cap opportunity that could work.
Yeah, and you can tell it's not that liquid because just today it was down 7%. Let's get to your stock picks, gents. I'm not going to be asking you about capital appreciation. That question was strictly for Rowan.
Thank you.
What is your stock pick for today?
My stock pick is Roynet, and the reason why I picked it was because it's the sort of stock that encapsulates the value that you find in SA small and medium cap stocks. So this is a stock that has benefited a lot from the renewable energy cycle. And I think initially investors thought that was it, but it's a nicely diversified stock. They're also in defense industry, out of the and they're diversified out of South Africa. They're also in electronics. They engage in R&D. It's not at a significant valuation typical of SA Inc. companies. And I think this is one that has good, solid potential over the short to medium term.
All right. On your side, Rowan, what are you picking today?
Yeah, we're running out of ideas in South Africa, so we've gone with Stellantis, which is actually listed in Italy. They did report this today. It's the holding company for Fiat and Jeep Chrysler in the US. So had very strong numbers. The shares actually popped on the results. They announced a good dividend and a large share buyback program. So the PE remains low. It's still, after very strong share price performance, sort of looks like a forward P of 4 with a dividend yield of about 6%. It just shows you how these traditional ICE, internal combustion engine car companies, are valued so low. But we are seeing a shift away from BEVs, battery electric vehicles, back to internal combustion engine vehicles. And so Fiat is very well placed, very strong position in the US, where we see the economy remain strong, sales have been strong. The forward numbers maybe not as exciting as it has been. The profits have been great, but it's still a very good value account, and we think it will continue to benefit as sentiment shifts away from electric vehicles and back to traditional vehicles.
All right. Well, thank you so much for your time and for your analysis today, gents. Really appreciate it. That is all for tonight's Stock Watch. Thanks to our guests, Rowan Williams from Nitrogen Fund Managers and Mutooni from Sanlam Investments. Up next, The Close. Stay watching.